Hello and welcome to our market alert video for today, which is September 30, 2023, the last day of what has been an absolutely miserable quarter. I want to get into all of that with you, but before I do, I want to share with you some exciting news for us. We have a charity that is, let me introduce myself before I go further. I'm Ken Moraif, and I'm the founder and CEO of Retirement Planners of America. And we have a charity that is called RPOA Cares, RPOA Cares. And we did a golf scramble with our clients this last week, and we raised enough money to provide a food pantry, Minnie's Food Pantry, with 8,640 meals for people, seniors, who are in need of meals. And so that was very exciting, and we're very proud of that. And so we're actually thinking about opening it up to non-clients as well. If it was that successful with our clients, maybe you might want to participate as well. We'll keep you posted. So let's talk about what's gone on here this quarter, but more importantly, where we think we're going to go from here. Now, of course, the dark clouds we've been talking about for several months now, with one new one, of course, the UAW strike, but the dark clouds are still here. The recession that looms if the Federal Reserve overdid it with interest rates. Are they going to have to raise interest rates more with inflation still high? And now we've adding on to it, of course, the government shutdown, and as I mentioned, the UAW strike. So all put together, it's kind of a gloomy situation. So where do we go from here? Well, in our view, we're going to have a rally in leading into the end of this year, and we think the market will be higher than it is today by the end of this year. So why? Well, because our fearless forecast, as you know, was that we would have a correction around now, because we thought that inflation would not be over with by the end of this year. We said that the Federal Reserve would not be lowering interest rates in the end of this year, and they're not. But the market had gone up quite a bit in the anticipation that inflation was over with, the Fed had won, and they'd start lowering interest rates. So we said that this inflation shock, as we called it, would cause a correction, which is the market going down usually anywhere from 5 to 15%. And right now it's down a little over 7% since the high in late July. So all that we said would come true seems to have done so. So where do we go from here? Well, we think we're going to have a rally into the end of the year, and it may start in the next few weeks. Corrections, the one we're in, just to give you some historical precedent, are relatively normal. Over the last 50 years, they happen about once a year. And they tend to not last very long, but they're attention-getting. But we forget them. If I were to ask you to name the dates of the last 10 corrections over the last 10 years, you probably couldn't, because you've forgotten them already. Why? Because they didn't last long. So we think that probably in the next month or so, this one will be behind us, and we'll be in a rally into the year end. So why would we be in a rally? The reason why is because investors tend to be forward-looking. They tend to look into the future when they invest. Where do we think we will be later on? I'm investing for the future. And historically, if you look at when the market goes down, it tends to go down about 6 months ahead of when a recession is about to start. And conversely, it tends to go up 6 months ahead of when a recession is coming to an end. So it's looking 6 months ahead and investing accordingly. So if our view that inflation will be relatively under control, the Federal Reserve will start making sounds like they're done raising interest rates, maybe even starting to lower them. We think that'll be somewhere in the second quarter of next year, so April, May time zone. And if that's the case, then you back that up 6 months, and guess where you are? You're around now. So we think that investors will see this as a buying opportunity, this correction we've had, and look forward into the future and say 6 months from now, will inflation still be as high as it is today? Will the Fed still be this massive threat? Will we still have the UAW strike? Will we still have this government shutdown? Most likely all of those things will be behind us, or at least relatively abated. And so we think that investors will take advantage of this correction to buy in. So we're bullish on stocks still, despite what's been happening. On the bond side, as you know, we've been out of bonds since April of 2022. So over, well, a year and a half now, almost. And so why? Well, because as the Fed raises interest rates, bonds tend not to do well. And if you look at how if you own bonds, look at your bond portfolio. Last year, I bet it got hammered. And probably this year it got hammered too. This quarter probably got really hammered. So we don't want to be in something that gets hammered. We don't like getting hammered. And so we're going to stay out of bonds probably, you know, with the timing of when the Fed starts making the noises about lowering interest rates, which will be another 6 months or so. Therefore, right now, we are not in bonds, even though we do have an allocation for bonds, we're not in them. Where are we? With our bond allocation, we are actually in the money market fund. And right now, money market fund is making you know, a little over 5%. And so we're getting paid to wait and to ride out the storm and to avoid the risk that bonds represent in our view. So that's where we are. And I hope that this video finds you healthy, wealthy, and wise. And as you know, our firm, Retirement Planners of America, we have a singular goal, and we think it's a noble purpose, and that is to create as many SCWPers as possible. And you may be wondering what a SCWPer is. Well, a SCWPer is a client of ours who has retired and is now enjoying their second childhood without parental supervision. And SCWPers is the acronym for that. And the verb is SCWPering. So we have our SCWPers out there SCWPering. And we want you to do that. So see if we're a fit for you. Go to our website and visit with one of our retirement planners. You can go to RPOA.com, or you can click the link below this video. Thank you for watching. Share this with as many of your friends and business associates as you can. We'd love to help them too. And we'll talk soon.